And we are back live with the end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. All right, so for those that missed it earlier today, there was a lot of things happening in the news, and I did a midday report. If you missed it, I highly suggest you take time to check it out. And now we're going to look at how the market settled and where we go from here. All right, so starting off with the US dollar. As you know, tomorrow is Take Back Friday, where you can expect probably a very powerful reversal in the majority of the markets that were down today. They should probably rally tomorrow. Your US dollar has now created a bullish pointer on the day due to the pullback into the close. So if not tomorrow, at some point, I anticipate that today's high in the US dollar will be taken out. All right, so that is to be expected. Next up, this is how wheat settled on the day. All right, wheat settled at the high of the session, $9.26 a bushel. $9.26 a bushel. My goodness. And that's well over a 100% increase, as we talked about before. So that is very much hyperinflation when you double the price of wheat. Oh, yeah, definitely. So this bull is going to keep on running. All things being equal, we expect the market to continue to run into next week. We'll see what happens tonight, though. All right, here is what Bitcoin did. All right, so it created a bearish pointer, unfortunately. Still, we got this one over here to deal with from January the 24th. So, unfortunately, I see much more downside coming for your Bitcoin. But I don't think it's going to stay there. We may spike below the 30,000 on a washout, some type of capitulation in the market, but then I think it's going to revive and rally. And I'm saying that because the market didn't continue to pop higher. If it would have popped higher and stalled here, then it would have came down and it would have just dropped really hard. But it didn't do that. It's moved sideways and then crashed today and then rallied into the close. So with that being said, I see the market moving south, but not staying there. I don't think it's going to be a long time. All right, so it's just what it is. We got to take things for what they are. All right, so as you can see here, this one is Litecoin. All right, and as you can see here, we got a bearish pointer. We got a new weekly low, and this one is pointing south. So we'll see what happens. All things being equal, though, it's looking like more downside is coming into next week for that one as well. Here's what gold did. All right, so gold did pull back some more and stayed low, making a massive bullish pointer. So even as gold needs to come down and fill this gap here, it will come back up. So the pullback in gold that's going to come, this correction that's going to come, I see it being short-lived because you got this bullish pointer. And so whatever news items come out or whatever factors come into play is really rather irrelevant. This is just letting you know that it's not all good, economically speaking. Gold will break 2,000. It will take out the old-time highs. This bullish pointer is proof of that. Okay. Moving right along, let's take a look at HACK, the Illuminati Index. What did it do? Closed at the high of the session. Wow. We put in a new weekly low and then closed at the high of the session. Is this the beginning of a bottom for hack. Is hack telling us that there's something coming? Because for the longest time, look at this bear market in hack. It's just it dropped precipitously out there, the high 60s. Look at this. We'll see. I don't know. We'll see how the markets close tomorrow. Now, do you really think that this is a bear market? Well, let's take a look. This here is a little security that I don't really talk about that much, but the ticker is HDGE. So Howard, David, George, Edward. Okay. Now, this one is your equity bear ETF. It's supposed to rise when the stock market is falling. Look what it did. This is a crazy bar. This market, this security just exploded today and then crashed and closed near the low of the session, making a primary crash alert. I want you to hear me. This is a primary crash alert. So it's been going sideways up and down in a pretty wide range for a while. Really not too wide. I'll say a $2, $3 range. And now it's looking like this one is ready to crack. So if this ETF that tracks, the rallies when the markets fall, this is showing you that whatever happened today was, the buy the rumor, sell the news. So when the news broke of the war, market rallied, then corrected itself. Sell the news. That means that what you saw today was short-lived. Interesting, right? Here's the Nasdaq 100. Look what it did. What do you have here? Close at the high of the session, creating a primary rally alert for tonight into tomorrow, which means for now, you got a little short-term bottom in place, but it's a bearish pointer. So overhead trendline resistance at the 15,000 mark is the initial target, but it'll probably fail before it hits 14.5. All right. I know the Fed's going to pump money. You're right about that. The Fed is going to do it. They're not going to stop. All right. They're not going to stop. You're right. But will that make a difference? Or is the Fed losing control? All right, here is your crude oil. This is how it fared into the close. It collapsed into the close. Hit almost $100 a barrel. Actually, you did. You hit $100.52 per barrel in light sweet crude. All right, WTI crude. And you made a massive bullish pointer. This shows what I showed you yesterday and the day before, that the bears are still technically in control of this one, keeping this one at bay in a corrective stance. Today's rally, the breakout was enough to get it out of the correction territory, but then it collapses right back down again. And you made a new weekly high, but is it enough? The way these markets crashed into the close, I don't know. All right. Russell my hustle. This is how the Russell fared today. Now, it made a spike low as well. This is a bearish pointer. Took out the prior bearish pointer, which we talk about here. And you made a new weekly low, but you rallied and closed almost at the high of the session. So, where do you go from here? I think right now, it's just showing that the top of the overhead trendline resistance is the initial target. All right, this market is staying with a more bullish perspective, not a bearish one. All right, even though I know we're below the Kumo cloud, I know we're below the trend line resistance here, and you got that locked in selling pressure. I know, but something happened today with that rally into the close that may make you say, I think the market wants to bounce, but you will take out this pointer just like you took out this one here. So, excuse me. What I'm actually saying is Expect today's lows to be revisited at some point in the near future, ladies and gentlemen. Sorry to have to break it to you. Here's silver. High hold silver, right? Silver rallied and broke down and closed at the low of the session. You broke, you got almost up to 25.50 and collapsed, and just shy of the 25.50 mark, and you just crashed. Bears still in control. All right. Yeah, you had that bullish momentum coming in as the market dead cat bounced off the low point, but the market's still being kept at bay. That's why it has an overall bearish perspective right now. What about bonds? How did the bonds do? Well, since we had this rally alert, this primary rally alert, the market has given upside production. You pulled back here, rallied today, crashed into the close. But you still have the a market bias that is bullish. All right, the Russell didn't crash and hit a new weekly low like its counterpart indexes did. So therefore, overhead trendline resistance is in play for this bonds here. And as you see, I think this market wants to get up to about the 141, 142 handle. So yeah, that's what we're seeing right now. How about nat gas? Well, looking at ticker UNG, which is the nat gas ETF, it did just enough today to come off of a lock. You were locked into the downside, even though you had a dead cat bounce here. You had the primary rally alert going all the way back to February the 11th. You got all this upside production. Market just ran out of steam and crashed into the close. So the bulls, technically speaking, still have the advantage right now in the nat gas. And you have this big gap up here that needs to be closed. So I think the market's going to come up here and at least close this gap, if not take out the bullish pointer up here. So UNG is in play. Just waiting for the trend line to come out of the Kumo cloud top side. And we'll see if that can give the market the thrust that it needs. Yeah, it was a very incredible day. Yes, it was. And thanks, Mick, for the love there. I appreciate it. Appreciate it. And yeah, very incredible day with the wild reversal into the close. All right, just a couple more charts left. Here's the U.S. dollar counterpart I was telling you about, UUP. All right, so the dollar, you can see this is tracking with the U.S. dollar index pretty well. You had the spike, right? You had the spike high, crash into the close, right? Creating a bullish pointer, but you also have this massive gap. So if not tomorrow, at some point in the near future, you need to come down and close this gap at least. The bulls have the bias in the market right now. You've come off a lock. You are locked into that downtrend perspective, even though you really didn't get any follow through from this bearish pointer here. So I think the first order of business is to at least close the gap. But if the market is moving the way I think it will, I think the dollar will lose some of its upside momentum temporarily at least. I think this bearish pointer will be taken out. This gap will be closed. And then maybe, just maybe, the market can recover and continue its bullish climb or not. But right now, this is what it's looking like. This is what it's looking like. All right, here's XLE. Someone had bought that up earlier. And here's the XLE. Tracking with the crude oil futures pretty well, actually. But you do have a gap from January the 4th of 2022 that has not been filled, has not been reconciled. That gap needs to be reconciled 100% before doing anything else. And the bears have it right now. The bias and XLE is a bearish one. Trendline support at 64 is the first initial target that's in play, followed by the top of the Kumo cloud, which is around the 59-ish level. All right, so yeah, I think more downside to come in your energy, believe it or not. All right, you asked me about the Canadian dollar. Let's see what I got for you on that one. Do I have some Canadian for you? I think I do. I just have to find where it is. How about? All right, here we go. Canadian dollar. All right, let's see what we got. All right, so here's your daily chart, your Canadian dollar. Yeah. So you see here where it opened right where it closed and then just collapsed. The market just collapsed. Then you got a nice technical bounce off the low into the close. But yeah, this is a bearish pointer, but really it is today's bar in your Canadian dollar is unimportant only because you're in a longer term range bound market. You got a bullish slant, bullish bias, but you're sideways. You're still consolidated. Even though you got out of the Kumo cloud, you're still consolidated. You haven't moved outside of the bar of December the 7th of 2021. You're still trading in that range. Nothing's really happening there. All right. And that's the Canadian dollar. All right. The next one you asked about was AMC. Let's see, AMC. Right. Here we go. All right. So waiting for it to load. Taking its time. I don't know if it's gonna. Oh, there it is. Okay. All right. So here's your AMC. This is today's price action. You can see that you had this nice little rally close at the high of the session, and you created a primary rally alert just like you did back here. So top side overhead trend line resistance is in play. I think the market's going to try to get to around 19 or 20-ish. We'll see what happens. We will see what happens. All right. Next up, let's see here. All right, you want to see triple U. Let's see the triple U. See what's going on with that. This one will take a moment. Thank you. Thank you, Thomas. I appreciate that. You know I aim to please. All right, so here's the triple U that you wanted to see. Yeah, man, this one is very interesting. You can see, look at this bar. All right, so this one exploded, man. All right, so you closed yesterday around $3.01, and then today you exploded to $4.36 before crashing into the close and closing at $2.98, thus creating a massive bullish pointer and a new weekly high. Therefore, I believe this one is going to try to take out this upside bullish pointer. Yeah, that's where you are right now. So this one has room to go. I do see this bearish pointer back here, but it looks like it tried to get reconciled with this one here. Technically speaking, this is a test of the pointer. Didn't take it out, but tested it. Still has the potential to come down. The one thing with tests are 50-50. A test of a pointer, sometimes the market will just let that test go and be like, okay, we tested it. We didn't want to take it out. Let's move on. It's a 50-50. Other times the market will say, yeah, we tested it, but nah, we want to come back. Let's run that back. And then it takes it out, and then it reverses and rallies. So not necessarily out of the woods yet, but this is considered a successful test. So we'll see what happens. All right, let's see here. What else I got? I think that's all I got. Let's see. All right. Someone wants to see Vor Biopharma. All right. Let's see what we got here. All right. This one rallied and closed at the high of the session, $8.61. This has a primary rally alert as well. It looks like the market is trying to form a base so that it can put in a bottom and rally from here. You do have a primary rally alert for tomorrow's trading. Overhead trend line resistance around the $9.5 to $10 mark would be the initial target. You do have an air pocket between the bottom of the Kumo cloud and the trend line. So you could get up near that 10-ish handle before running into some pretty difficult resistance. We'll see what happens. But yeah, very interesting setup on that one. All right, let's see. Next one you want to see. Is that RED? All right, let's see what we got. Is that on the ASX? I'm thinking it's on the ASX. All right, so that's red 5. All right, let's see. All right, red 5. Let's see what we got. All right, so this one put in a new weekly high as well, and closed around the 33 cents. Yeah, this one wants to run. Yeah, this bar, sort of a bearish pointer type thing, but because of the structure of this thing, how it broke out of the consolidation, extending the range of the consolidation, I think you're okay. I think the one that matters though is this bearish pointer right here. This one matters. So the market could have the potential to come down, test and or take this out. But right now you look pretty good. You broke out and it's looking all right. Like the market may want to keep this going, may want to continue to run on this one. So we'll see. All right, and last but not least, let's get the last one up. Then we'll call it a night. All right, let's see. All right, Russia ETF, Vanex RSX. That is the Russian ETF. Whoa, Nelly. All right. This is what happened to your Russia ETF. Absolutely collapsed. Absolutely. I mean, just wow. So you've been in a bear market for a while. You've been getting these sell signals on the way down to add positions and or enter new positions short. Then you had a brief hiatus when you had the primary rally alert, got a little technical bounce, bumped ahead on the trend line resistance, pulled back from that, then try to run it back, this time creating a primary crash alert, and then you just broke. The market just broke. Wow. These gaps on these breaks are precipitous. At some point, you do have to reconcile the gap. You got to reconcile this gap and this one. Is it time to buy that ETF? Nah, not until the system tells me to. Absolutely not. I don't second guess the system. I do what the system says, man. If the system gives a buy signal, then by all means, I go by what the system says. The system will give you the alerts on your dashboard. These videos are limited in scope. I'm just showing you the algo charts, but the system on your dashboard gives you not only the data from the algo charts in these videos, but it also breaks it down and lets you know if there is also a potential for a contrarian entry point. All right. So just something to think about. All right. That's what you want. That's what you want to look for. All right. You want to look for, if you're still getting these sell signals, if you start getting buy signals, stop and reverse day orders coming in, you want to look for those days. That'll give you the heads up if and when the trend is ready to start turning. Normally on a super parabolic day, you fade that, but these are perilous times. Did I do Ethereum? No, I did not. Let me pull that up for you right quick. I thought I had that up, but I didn't. So let me go ahead and get that up for you. Now that they have the Ethereum Futures contract, it's a lot of fun. It's a lot of fun. All right, here we go. Let's take a look at the Ethereum by the way of the futures chart. Just like we do with Bitcoin, we look at the futures Bitcoin, not the cash market. All right, so here is your Ethereum futures, okay? You created a bearish pointer today that is significant. And you got this bearish pointer back here from January the 24th. Therefore, I think more downside potential is coming. You did stop short. You only rallied just a little bit, but you did collapse significantly today before rallying into the close. So you still have a bullish perspective. You're in the green zone, but you're up against right where you are is a resistance zone. The next one is up here at the trend line resistance. So I would just do whatever the dashboard tells you to do. Buy where it tells you to buy, sell where it tells you to sell, and just take it that way. Take it easy with that. Again, don't try to outthink the system. Don't try to second guess the system. Just do what it tells you to do. Place the stops, the appropriate stops, and remember, you hold overnight. All right. Every trade you do, your initial trade, you're holding overnight, unless it's some significant gain on the day. Then yeah, by all means, you can book those profits. Not to worry. But just in everyday trading, we always count the initial trade where we get triggered. We count that as day one. So we hold that over and wait for see how the markets, react, what they do. And I use the recommended stops on the reports. And depending on the situation, I'll start popping my way through it by using the recommended stops on the report. All right. So, and if you feel a type of way, you can always use the pop method, but the recommended stops on the report are designed to keep you in the trades a lot longer. It allows for the market to have gyrations and volatility without stopping you out prematurely. So just keep that in the back of your mind as well. All right, that's all I got time for tonight, ladies and gentlemen. I do thank you for your time. Remember, tomorrow is Friday, so it could be rather interesting as the markets want to, take back some of today's losses. So just be prepared for that. It could also continue to fall. Anything goes, but you're in good hands if you just follow the report and don't try to second guess. Don't overthink anything. Just follow the rules, follow the reports. That's what the dashboard is for. All right. And the reports have already gone out. So you already got your marching orders. And with that being said, I will see you guys on Sunday when the reports come out. Until then, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.